Morning, Hex fam. It's Wells only on the East Coast. Good evening or good afternoon, depending where you're at. This is a Hex chart set for the crossover of August 12th, 2021. So let's get right to it. No disclaimer as always, the information displayed in this broadcast is known to cause increased amounts of FOMO. Wells only is alone and is not responsible for any piss poor staking decisions you might make. Please assess your time and interest accordingly. Right? Your interest and interest. Get it? Yeah, that was whack. Sorry. Don't be a reg seller is my point because as you can see, they're always going to be reg. Now, of course, if you must sell, then you have to sell. No worries. But understand what you're doing first and foremost. Now, to start off, I always like to go with what is any economy. Now, what this means is that no matter which perspective you're taking, whether it is a local economy or an international economy, right? Economies of scale, it really applies to what size we're talking about, right? That's basically what that term is in essence detailing or trying to detail anyway. And we're looking at an economy, right? Whether it's a little camp or the globe, it's all one pie. There are those that create value by providing goods and services to those that need them, and then there are those that extract value to facilitate civilization within that group, right? And typically that bucket that extracts value is typically called the public sector, aka government, right? And typically the way it's supposed to work is that they actually allot the funds to where they're supposed to based on what's on paper and whatnot. But as we all know, it just doesn't work like that. And that's really a function of people taking their eye off the ball across the board. And this is why, right, we go over this chart so people understand what's going on and why their economy is trash, right? And it's honestly a function of the takeaway of value creation from an economy, and that always and only can come from the public sector. It can't come from the consumer because if the consumer isn't buying anything in the first place, what value are you creating? And the only entity that we know of that takes value is the public sector. So it's pretty straightforward when you really think about it. All right, let's keep moving. Now we're going to get into the market cap dominance charts for the top 100. On the 6th of August, we were at 4.66%. On the 10th, we dropped down to 3.6, and today we are back up to 4.16. And as you guys know, if you watched my latest video, this shouldn't even be a surprise. Saw a little divergence between the TShares and the HEX index, and HEX just in general, right? That typically leads to a price pump in HEX, and we've started seeing that now. So it's just time to enjoy the ride until the next sideways consolidation. And as of today, all right. So this chart is detailing the first 606 days live for each asset class that you're looking at on this chart, which is Bitcoin, Ethereum, HEX, and T-shares. I have also thrown on here power trend lines, which detail the return nature of the respective asset class in question. The brown one is for Ethereum, and the golden one, naturally, is for T-shares. Now, this trend line is detailing the trend, the power trend shape that the returns take. So we all know, or maybe we don't know, but we know exponential powers or exponents, and this is just a derivation of that rule in logarithmic form. Because it's just giving us the logarithmic nature of the returns for the respective data sets. In this case, Ethereum, and in this case, T-shares. And if we look up any other logarithmic function in its general sense, right, just basically what they are without any values being added to them, you will discover that the T-shares index is log base 2, which is the fastest and highest. It's just the most, it's the fastest accelerating logarithmic function out of the set. I'll outside of, I think, but that's clearly cheating. Um, I wonder if anybody could code that. All right. And then Ethereum's power trend line is log base 10. So you can look that up, confirm it yourself, and then you'll see why Hex is such an outperformer, just from a mathematical perspective, right? Versus Ethereum, for example. Now we're basically at 63.5 versus 3.5 for Ethereum. It's almost 30 to 1, right? 63 divided by 3. Whatever that number is, it's pretty small, right? 63 divided by 3 equals 21x. So yeah, Hex is out. I meant really big, not really small. So Hex is outpacing Ethereum by 21x. So this is usually the delta between TShares and Hex is usually about 60-70%. Let's see here, 118 divided by 63, is it? Yeah. 63.5. This one. Yeah, right now the delta is 85. So we're gonna get a nice little move because yeah, it shouldn't be that big. So price has to catch up to where T shares are at in terms of valuation, and it's just math. It's not anything else. The system has to function a certain way, and that's what it will do. Ethereum is at 3,686. Bitcoin index is at 916.03. Now again, this is on its 606th day of existence, right? So this is an age comparison. Moving on to the post Big Payday chart. Now, what was Big Payday? Big Payday was this one inflationary event that actually occurs in Bitcoin every 210,000 blocks. For Hex, it was just a one-time event, and those events that I'm talking about for Bitcoin are the first halving, the second, and third. And those happened, as you all probably know by now, in 2012, 2016, and 2020, respectively, right? And every time a Bitcoin halving occurred, what happened was that the quantity of inflation being pumped out into the system was reduced. Now, as we can see on this chart, less inflation equates to less pump for the system of Bitcoin. So Hex works in a distinct way, and we'll get to that shortly. But the Big Payday was a one-time inflationary event, right? And it happened on November 19th, which, as you can see, was the start of Big Payday on the chart I just had highlighted there. But what happened before Big Payday was we had a price run up into November 1st to about 1.5 cents. Then price sold off into Big Payday, right? Because people assumed it was a scam, dump, whatever. I don't know. People can't read. And they just missed the single biggest opportunity at that point in time in the entire space, right? The crypto plus promise coin space, because Hex is the only crypto, and then you have the rest of those promise coins. And ever since that point in time, the system has been absorbing all of that inflation, right? And then I think it was probably March, that was the end of that point in time. The system was fully ready to act on its own, and it's been working as designed ever since. And here we are again on the next leg up. And we're just leaving the first, second, and third Bitcoin halving behind. I mean, it's not even fair. It's just child's play. So, and again, this is really Hex's true return nature right here, right? This doesn't include the inflationary period of before Big Payday, right? Which is when that was basically the launch phase, right? This isn't including any of the launch phase. So this is Hex trading on a DEX and with the inflation absorbed all in one instance. So this is going to be the true way that Hex moves, unless something crazy happens and, right, everybody ends stakes and just dumps their position. And the odds of that happening are like zero, because that's just, seriously. That means they're dumping every Bitcoin too, right? They're dumping every Ethereum. They're dumping, that's what I mean, catastrophic event. So here we have the T-shares to Ethereum and T-shares to Bitcoin chart. Ethereum in orange and Ethereum in pink and Bitcoin in orange. And T-shares to Bitcoin are at 5.55%. And again, we sustain value over time, and that's what T-shares is all about, because this is a dollar measure, right? Dollar cost of a T-share divided by the dollar cost of Bitcoin And the same deal versus Ethereum. And versus Ethereum, we're almost at 82% again. And again, we just sustained value, right? I mean, 3 months ago we were trading at, sub 10% versus Ethereum. Now we're pretty much at parity consistently. Moving forward, that's just what it's going to be. It's just going to be a gyration versus parity from here on out until we eclipse that, right? Because that's just how the system works. And it's going to be the same thing for Bitcoin, right? We're going to sustain 4.5–5% on the lower bound, and eventually eclipse that 10% mark, because that's just what's going to happen. All right, hex stock to flow tracker. This is dynamic, so there's no way to create the kind of model that exists for Bitcoin, because we cannot forecast what's going to happen in the future in a bonding curve system. So if you don't know what a bonding curve system is, go watch the last 2 Hex live talk streams I did with Axis and Hexadente, where we went over token design and the difference between bonding curve and a hard supply and whatever else exists out there. So check that one out. It's on my YouTube channel. YouTube.com/Wells only, of course. All right, so on this chart, what we have is the TShare rate, right, which is the way the system sustains and measures value or marks value, right? And then how does that number come to be? Well, it's the dollar cost of a TShare divided by the dollar cost of 10,000 hex. And currently, the dollar cost of a TShare is $2,568.99. And then we have $1,382.61 for 10,000 hex. And when you divide those two values, what you end up getting is this TShare rate. And that's 18,580.77 hex per TShare. Now, this is a forward-looking number, because if you look at the hex TShare at the hex system right now, right, we go to go.hex.com, we're going to note that that number is actually 18,430, if I remember correctly. Let's just confirm. All right, 18,434. So there you go. So we're well on our way to that point in time, right, or point in the value of the system. And that's what this chart is letting us know, because this is a present point in time valuation as of last night, right, at the crossover. So this is what the market is looking forward to, right, because the TShare rate only moves as a function of the end staking, not as a function of this actual cost. It's a systemic value, it's a systemic value that is given to you by the system itself. It's not something that can be traded, for example. And here we have the APY of 40.38, which is a function of the nice little bump we got in the payout per TShare yesterday, thanks to the penalties we saw at the end of the day or throughout the day. And here we have the value proposition for HEX, as always. Now, the value proposition is the payout per TShare, right? And this chart is showing us the payout per TShare sum line, right? Now, this is all of the HEX paid out to each staker since inception for one single TShare. So if you got 100 TShares, you multiply this number by 100. That's how many HEX you've been paid out since day one. If you have 1,000, you know what to do, so on and so forth. And again, HEX just tracks this line, right, because this is the reason people buy it. So the system is designed to work in accordance with what this line is doing, because it's the value proposition. And this crypto actually has one. And that's the whole point, right? It's to make money, which is the whole point of investing capital in the first place. So it makes the decision making here pretty easy when you look at this chart, right? Because we see that over time, price is always going to follow this. And now here's something that's very important to understand. This metric here stacks, right? It stacks. Every day this is going to have an additional value added to it, right? So this number is always going to go up, no matter how you look at it, right? So price is always going to track this. And so price is always going to be going up as well, unless people just don't want to keep making money. So it's really, really straightforward when you think about the game theory behind how the system works and how it incentivizes people to hold HEX for as long as they possibly can. Now, this is the return figure. So this chart is the HEX Payout Index Metrics chart, right? And this is the value proposition, which is the HEX Payout per TShare. right? So this is that number in return form. And if you want to know the actual return, because this is indexed, you would just subtract 100 because that's a starting point, and that would be 229,313 or 314 rounding up, right? So this is a crazy figure. This is just for doing nothing, right? This value in percent is this value cumulative, right? This is the cumulative value of HEX paid out. This is the return figure of that HEX paid out. So being a staker is pretty cool. Something you kind of like always have been looking for your whole life but didn't know it existed. Here it is. Payout per TShare index is letting you know that the system has 5x in terms of payout since inception, but the cool thing is that it actually sustains that. It's not volatile, right? That's the point of this chart. Same thing with the daily payout index, is letting us know that the system has increased its daily payout 171x. But on top of that, it's just that it's not volatile, right? The system is always going to pay that. And if it is volatile, it's upside volatility, as we can see here, not downside. Because there is a floor, right? There's basically a horizontal line down here that just never is breached. It's imaginary, but it's there. And the system respects it, and that's the point. Math doesn't care about what you see, it cares about what it sees. It's very important to understand that, right? It's kind of the same thing in the payout per TShare index. There's an imaginary horizontal line below it, right below this 4.5 value or so that the system just won't breach, right? Because of the staker class, right? We're keeping it afloat by being staked to that tune. Because otherwise, why would the system pay out T-shirt? Why would it pay out? There's no T-shirts, right? So it's a staker class keeping it afloat. Here we have the HEX payout metrics. And again, we had a payout per T-share of 6.201 HEX yesterday, or at the crossover, with a daily payout of 63.5 million HEX, with a total T-share count of 10.98 million trillion shares. So the system is just doing what it does, and we're getting paid nicely. And again, this is a function of, well, I think this. Alright guys, had a little error in my chart, so I fixed that. Sorry about that. So the increased payout must come with an increase. The increased payout per T-share must come with an increased daily payout by the system. You can't get more HEX if the system doesn't generate it. So that was clearly an error on my chart. And again, it's in conjunction with total T-share count of 10.988 million trillion shares. And now we have the everybody gets paid chart. And this chart is essentially just a HEX price here in dark pink, laid in between the various averages of the payout per T-share value here. Here we have the all-time average, so it's tracking every single payout per T-share in average, as an average. Here we have a discrete or a fixed value of 28 days, so the most recent 28-day average and the most recent 55-day average. And that is the pink line, the 28-day is the orange line, and the payout per T-share average line is the yellow line. And interestingly enough, it's important to remember that this is an average, right? These are averages. And the system creates value every day, right? So in reality, the system is always doing this. It's always going up and to the right, because this is always going up and to the right, right? Because this is always going up and to the right, right? So over time, just like we've been going up in value over time and creating more value, and we've been seeing the price reflect that, I'm starting to think that price might not have to touch this again. It's more that this will have to touch price again, because again, it's an average, right? And value is being created every single day. This is just an average of all the days, so it is going to lag way behind price. So maybe we get a bunch of these all the time instead of it actually coming back and touching the average, if that makes sense. While again, this just continues to float, right? Because we're creating value every day. So it's not like there's any actual reversion to any mean here, because the value is constantly being created. Constantly. Very important to understand that. Alright, here we have the expiring shares chart. And again, the whole point of looking at these charts is just to see what the system has in terms of weights on the staking side, right? Short term, because that's what always drives the TShare rate, right? Up or down. Or I'm sorry, not up or down, but the TShare rate always goes up. But this is what drives the TShare rate higher, is the end staking, right? So if we have the preponderance of the stakes ending on the front side, that means that the TShare rate is always going to be moving up, whether it's 1 hex or 10. It's constantly going to be moving up. And that's what we see when we look at the TShare rate over time. It's always constantly moving up. Now, this is in the month of August, all of these readings, and we're only mid-August. So the lines are going to pretty much look the same in the front part. It's more of like what September and October and November look like. That will interest us at this point, because it's going to pretty much be status quo for the front month as we look through it. This is the second, this is the sixth, and as you can see, August didn't really drop that much. Maybe it didn't even move at all. Yeah, maybe like 1%. But September picked up a bit, and so did October and November. Let's see what happened on the 10th. Looks like some of them dropped a bit. Now they're actually static. September picked up a bit more, but November, October are static. And now for today, looks pretty static to me again as well. Yeah. So not much change, right? But again, it's about traveling through time, and most people are going to do, 30-day stakes at the beginning of the month and the end of the month. So regardless, right, it's always going to be a rolling 30-day scenario where stakes are always ending, and this is what this is showing us, and this is what is always going to carry HEX up and to the right, because the dollar cost of a TShare is always going to go up and to the right, because it's always going to require more HEX, right, for that TShare rate. That TShare rate is always going to go up, and that means that you're always going to need more HEX to acquire a single TShare, right, which is how the system determines the allocation of interest or yield, whichever term you like to use. And now we're looking at the all-time HEX versus ETH and versus Bitcoin correlation charts. Now there's a few things that I like people to take note of upon looking at this chart. First thing is the R squared value, which in this instance is 0.025 after the decimal. For Bitcoin, meaning the correlation is 0. In this instance, it's a bunch of zeros and an 8, right? So it's 0 again. And it's another thing I want people to notice is the HEX returns on the x-axis, and the Ethereum and Bitcoin returns on the y-axis. All right, look at the Bitcoin chart, same deal. Third thing I want people to note is that the dot plot, right, is an x and y dot plot of every respective return for a respective point in time, right? So these are the X and Y for their date and time, a date and time match for this X and Y. And each X and Y is a return of HEX and X, and the return of Bitcoin or Ethereum and Y. So the next thing I'd like you to notice is that the majority of the HEX returns on the right side of its 0 on its axis, which is the x-axis. Now for Ethereum Bitcoin, it's not necessarily the case, right? This is the 0 line on Y. This is the y-axis, and as you can see, their returns are pretty spread out. And then on top of that, the majority of their returns are below the 0 line for the y-axis. Same thing with Bitcoin. So while they might be up and to the right as well over the long term, you do deal with a lot of negative draft while you are holding those assets. So in other words, if you like, alpha, right, you would invest in something that looks like HEX because it constantly performs positively, right? This is what this chart is showing us, because if you look at the 0 line on the x-axis and you look to the left of it, I mean, it's pretty clear that the grouping of the dots is primarily on the right side. And that's what you want to see as an asset manager, allocator, investor, trader, whatever, right? It's easy to trade something that goes only in one direction as well. You can try to short it, but you're playing with fire when you do that. All right, so this is the rolling correlations chart which is the dollar cost of a TShare and the dollar cost of HEX, right? In dollar terms, of course, dollar cost, dollar cost. So what we have on the chart is 21-day, 34-day, and 55-day correlations, orange, gray, and yellow respectively, with HEX and magenta. And the current HEX price at the crossover, the price of HEX at the crossover was 13.8 cents. And the 55-day correlation, which is the longest one, which is the one that interests us the most, because once that one starts breaking down, then that means that the relationship could then break down. So what is this relation telling us? Well, given that the correlation has been 1 for over 90 days, going on 110 at this point, has been 1 basically since that point in time, 99.98, right? That's basically 1, or 99, yeah, 0.98, that's basically 1. And it's been 1 for over 100 days, right? This is statistically incredible. What this determines, or what this details, or what this leads us to know, is that as long as this relation stays true, and we can see that the short-term lines, right, are staying in conjunction or in confluence with the yellow line, right, which is the oldest, or the longest duration, right? And that lets us know that the relationship is strong. So ultimately, the price is going to rise again. The only question is how high. But the price of HEX is always going to rise because, as we just discussed, the TShare rate is always going to go up because of the yen staking, right? So the yen staking is like a bunch of little Bitcoin halvings, right? So that's the unique aspect of the HEX TShare system that is hard for people to grasp in how it operates, right? We have a consistent flood of halvings. And this is why the TShare rate always goes up, and this is why the system always maintains its value versus the rest, right? Versus the rest of the promise coin space, right? It can't compete because we have an actual measuring stick of value here, right? And this is why being in the system as long as possible is key. This is why staking the max is key. This is why understanding what staking the max and staking a year means, right? Like, there's differentiations in the yield that the system pays out. So it's not that you have to be maxed, you have to be staked to the max. It's just important to understand what it means to be staked to the max, because it's all math, right? And if you're making an investment, you have to understand what your return parameters are going to be, as well as what your risk parameters are. And in this system, it seems like we don't discuss risk parameters, but it's just that the system is designed to work a certain way, and the risk is really kind of removed in a certain sense if you think about it, because if you buy and stake HEX, well, then what you're doing is you're buying this pink line, right? You already own this pink line as some amalgamation, right, in the form of T-shares, right? But this pink line is what you're actually owning multiplied by the number of T-shares, right? Because this is the reality of your portfolio on a daily basis, plus, right, the value of all the HEX you own, right? But the T-share is accounting for this nexus of the equation, right? But then when we look at it plainly, as what this chart is doing, you have the price of HEX standing by itself with the daily price of the payout per T-share, right, which for yesterday was 6.201 HEX per T-share, or HEX paid out per T-share. And then I summed those values up to give us a adjusted HEX value, right? So for yesterday, it ended up being $1, the adjusted HEX value, and the payout per T-share was 86 cents. 6.201 multiplied by 13.83 cents, right? That's 86 cents. Now, why is this chart important? Well, this chart led me to call the bottom on the last chart set video that I made. And this was on Tuesday. Did it with Quant Gang as well. I called it on Quant Gang as well if you watched Tuesday night. And it was just a simple flattening of this curve, of this payout per T-share versus the divergence we were seeing in the system, right? In the price of HEX, right? Along with a higher low here in price, right? While we had a similar low in the payout per T-share, right? Now I'm gonna eventually put these charts in a different form so this can be viewed In the meantime, I'll try to create some type of indicator that could let us see this in a mathematical form and maybe highlight this point in time, because they happen throughout time. This isn't the first time I called the bottom. I did it here as well, did it here as well, did it here as well, because the system lets us see it, right? And that's the unique thing about it. You just have to know how to see it. And that's what I'm kind of trying to show you here. I mean, it's really hard to say or show without having each respective person tell me what they are seeing, because we all have different vantage points. But for this one specifically, you can see the slope of the downtrend is not as steep as this one, right? And this is what led me to see it at that point. Here we have a higher low, right? Like the line isn't as steep again, right? Here it's not as flat as it is up here, or shall I say inclined as it is up here. And again, the steepness of the slope, right? I mean, so there's these little unique characteristics that unless you understand rates of change and how they would look otherwise versus what you're seeing here, you're gonna miss it. So maybe it's cheating, I don't know, but it's visible, right? And that's how I can call it. And the most important thing to understand is that as this spread gets wider, it's going to cause the dips to get shallower or non-existent, as we've been seeing lately. And the rips could just get, higher and higher. It's really hard to say what's going to happen, but it stands to say that value is always being created here. And the higher the price of Hex goes, the shorter that these these shallow sideways moves are gonna get, and the higher the pumps are gonna go. Here we have the Hex price to earnings ratio, and the Hex price to earnings ratio is currently at 16%, letting us know that we'll essentially make our money back within 16% of 1 year, versus the all-time low for the S&P 500 price to earnings ratio of 551% during World War I, which implies that you wouldn't get your money back for 5.5 years. I mean, less than a fifth of a year, 5 years. I mean, and this was an important time. It doesn't exist anymore. So here it's 40 years, right? A fifth of a year, 40 years. I don't know. It seems pretty simple to me. This is where we are in terms of the network effect, right? These are amalgamation. This chart is an amalgamation of different asset classes. We got Apple stock, Microsoft stock, Google stock, all laid over Bitcoin, right? This is a Bitcoin on the left here, BLX as well, which is this chart right here. And the whole point of this chart is just to show that all markets move the same throughout time, because humans interact with markets. If you haven't seen my my first YouTube video, how cryptos work, the network effect, please go watch it. That is going to teach you a lot of things that you probably don't know, and you're going to probably want to know. So go check it out. This is how the APY works, right, in the system. It functions as a percentage of the coin, of the total supply. The coin stake as a percentage of the total supply. So right now we're at like 9.7%. So the APY being at 40.83 today is an anomaly, and as we saw, it was a function of the payout per TShare, right? Or the penalties in the payout per TShare, right? And let's go back to that chart just to take a look one more time. Here we are. Right, so as you can look at this payout per TShare line, the pink one, it's typically here 5.8 or so, 5.9, 5.7, right? 5.75. So for it to jump, that means something had to happen in order to increase the payout in the system, which is what we're seeing here. And that typically comes in the form of penalties. Penalties come in the form of two factors. Either somebody emergency end staked, or good accounting. Somebody didn't good account their stake. They forgot to end their stake, so it didn't get good accounted, right? It didn't get minted. So if you didn't end your stake, what happens is that after 2 weeks' time, the system your stake starts to bleed into the system 1% at a rate of 1% a week. So after 100 weeks time, your stake is zeroed out after those first 2 weeks where nothing happened. So you actually have a total of 102 weeks to save yourself in some terms of value if you have a stake that you have not been able to end stake. For example, during the high fee periods that was small once the Pulse network launches, right? Because once it comes time for that to come live, the fees there are not going to be such that you won't be able to end, a stake on a $200 stake. It's not going to cost you $100, right? Which is completely ridiculous. So that's just something I like to bring to people's attention. And also, know how at 100%, it still shows a ROI of 3.69 on the system, right? So if nobody is staked and it's just one person, they're receiving 369% because the system has a capacity to pay out 3.69%. A capacity to pay out 3.69%. So I hope you understand what the word capacity means, because it implies something. It implies that there is room, right? It means there's room for something to happen. So this is why the max ROI is 369%, right? And we're currently at near, in between 9 and 10% at 9.7. And then yesterday our ROI was almost 41%, or 40.83, thanks to the penalties that the system paid out to the staker class. And that's pretty much all we got, guys. Thank you guys for tuning into the video. If you got any questions, please let me know. Any comments, please let me know. And don't forget to check out my website, wellsonly.com. I'll be posting some blurbs, or blogs, blurb blogs, right, whatever it's called, on my blog. And I'll just keep posting some cool stuff on there. I also added a nice little table detailing how emergency unstakes work, because I noticed that Hex Wiki was down. So I figured let me at least replicate that on my site so people have somewhere to find it. And now I have an actual specific Hex tab, and all the cool Hex stuff will go there under that Hex tab. So just check that tab, and there might be updates to other cool stuff there in the future. Thanks, guys. See you soon.